Welcome to Iron Financial. This is the place where we forge stronger portfolios by putting market narratives under extreme stress. And today, we're putting ABSI, ticker ABSI, right under the microscope. Their latest earnings report just hit the wire.
And really, the story it's telling is, well, it's one of deep fractures and, at the same time, massive potential. So I guess the question is, are we about to conduct a full structural inspection to see if this thing is a solid foundation for billions, or if we're looking at a blueprint that's just fundamentally broken from the start?
That's exactly right. Let's get to work. Okay, so right out of the gate, the moment the numbers were released, the market sent a very clear signal, a 7% drop in after-hours trading. Now, that's not just a little tremor, that's a significant jolt to the system.
All right, so the first question is the most obvious one. Why did the stock get absolutely hammered? What did Wall Street see in that report that sent them sprinting for the exits? Is this a real fire, or are they just panicking at a little bit of smoke?
And that is precisely what we are here to figure out. To get to the bottom of it, we've laid out our analysis just like a building inspection. We're going to start with the most immediate damage, the earnings misfire. And from there, we'll look for any deeper cracks in the foundation.
Right, and once we've assessed all the damage, we're going to look at the potential. We'll examine the blueprint for growth, check out the key asset they're forging the future with, and then we'll run the whole thing through the durability test before we deliver our final verdict.
Okay, let's get right to the point of impact. Section 1, the earnings misfire. You know, preclinical biotech companies, they often get graded on a curve. But let's be clear, when you miss expectations this badly, the market doesn't grade on a curve. It takes out a big red pen. The headline numbers that dropped were just weak, and they immediately exposed some pretty serious vulnerabilities in the company's current operational strength. And here's the raw data. Look, an 11% miss on earnings per share, it's not great, but it's not a complete catastrophe. But then you look at that revenue line. Analysts were expecting $1.38 million. Absci delivered just $700,000.
Whoa, wait, hold on a second. That was a nearly 50% miss. In a market like this, a miss of that magnitude isn't just a crack in the foundation, it's a crater. Are you seriously telling me their ability to generate cash is that much weaker than everyone on the street thought it was?
Okay, so how bad does this actually get? You know, a single bad quarter, that could be a fluke. But are we looking at deeper issues here?
Our job here at Iron Financial is to hunt for systemic weakness. And when we inspect the full-year financials, that Q4 miss starts to look less like a one-time incident and more like a symptom of some very deep, very concerning cracks in the foundation of this company.
Just look at this. This chart lays out the year-over-year revenue trend pretty starkly. In 2024, the company managed to pull in $4.5 million. Fast forward to 2025, and that number dropped all the way down to $2.8 million.
Yeah, that's going in completely the wrong direction. For a company that's supposed to be in its growth phase, that's a massive red flag. I mean, how can you possibly project future growth when your recent history shows decay? This isn't building momentum. This is actively losing ground.
And this is where the story gets even more concerning. We have to juxtapose that falling revenue with their R&D spending. In 2024, they spent about $64 million. In 2025, that number ballooned to over $81 million.
So let's just be brutally clear about what this means. Absci is spending significantly more money to generate substantially less income. I mean, that is the literal definition of negative leverage. It's a business model that is bleeding cash at an accelerating rate.
And that brings us to the real gut punch number, the company's operating margin. Negative 4,229%. It's a figure that's so extreme it's hard to even wrap your head around it. This isn't just a sign of inefficiency. It is a measure of a massive cash inferno. It tells you that for every single dollar they manage to bring in, they are burning through an absolute mountain of cash just to keep the lights on and the labs running. This is easily the most severe structural weakness we've seen so far. So the total damage for the year? A net loss of over $115 million. That's even wider than the $103 million they lost the year before.
Okay, I have to step in here. These numbers are just brutal. We're talking about revenue that's going down, expenses that are soaring, and an operating margin that frankly looks like a typo. Is there any integrity to this financial structure at all? Or are we just standing here watching a slow-motion collapse? Is any of this real, or is it just hype?
And that is exactly the right question to be asking. but focusing only on these financials, it's a bit like looking at the exposed rebar and wet concrete of a skyscraper's foundation and declaring the whole project a failure. You're completely ignoring the architectural blueprint. That $81 million in R&D spend is being poured into building a platform that could potentially be worth billions. We have to look at the science behind the spend. So the real question is the market, in its absolute panic over a 50% revenue miss, completely missing the multi-billion-dollar blueprint?
That is the entire bull case right there. It isn't built on Q4 revenue, it's built on the disruptive potential of its core technology. That heavy spending is the price of admission if you want to try and reshape the entire world of drug discovery. It's a very high-stakes bet, but the potential payoff is just enormous.
So what exactly is this blueprint? Well, it's generative AI drug creation. Instead of the old, slow, trial-and-error method of finding new drugs, Absci is trying to unify the entire process into one. Their platform, called Origin 1, uses artificial intelligence to literally design brand new antibodies from scratch. And here's the key part. They can target what are called zero-prior epitopes. What that means is they're designing drugs for parts of a target that, as far as we know, nothing has ever successfully bound to before. This is the kind of heavy engineering that could redefine an entire industry. And look, this isn't just some theoretical platform sitting in a lab. That AI engine is actually forging real-world assets. Just look at this pipeline. It's not a single bet on one horse. They're creating multiple shots on goal. You've got their lead asset, ABS-201, which is targeting two massive indications. You have an antibody for inflammatory diseases, an immuno-oncologic candidate, and even a novel antibody for a very well-known cancer target. This is the physical output of all that R&D spending, a diversified portfolio of potential blockbuster drugs. So let's drill down on the single most important piece of this entire structure. If the AI platform is the blueprint, then their lead drug candidate, ABS-201, is the central, load-bearing beam for the entire investment case right now. Absolutely everything is hinging on this one asset, proving that the blueprint can actually be turned into a stable, valuable structure. Its success, or its failure, is going to have an outsized impact on the company's entire future. Now, here's the crucial point. ABS-201 isn't just one bet, it's two. First, it's targeting androgenetic alopecia. We're talking about male and female pattern hair loss. That's a massive underserved market. Second, they're going after endometriosis, a really debilitating condition that affects up to 10% of women across the globe, with an estimated 9 million just in the US alone. And get this, there is currently no FDA-approved disease-modifying therapy for endometriosis. The commercial potential in just these two markets is absolutely astronomical. You know, talk is cheap, especially in biotech. But this is data. These are actual images from a preclinical study in primates with male pattern baldness. You don't need to be a scientist to see what's happening here. Just look at the progression from baseline to 28 weeks and beyond. You can see clear, tangible, significant hair regrowth in the areas that were treated. This is the kind of visual evidence that starts to give that blueprint some real-world weight. And we can actually quantify that visual evidence. This chart from the study shows a 109% increase in the count of thick hairs in the bald assessment area over a 24-week period. This isn't just some cosmetic improvement. This is a hard data point that shows a dramatic, measurable biological effect. This is the kind of foundational data that underpins the entire bull case and, frankly, justifies all that heavy R&D spending. It suggests the science is sound. Okay, but preclinical primate data is one thing. It's promising, I'll give you that, but it is not human data. The path from the lab to the pharmacy is literally littered with drugs that looked fantastic in animals.
And that's a completely fair point, but this isn't some vague promise of results coming soon. Absci has laid out a clear, concrete clinical timeline. They are giving investors specific dates to circle on their calendars. In the first half of this year, we're going to get preliminary safety and PK data. Then, in the second half, we get the big one, interim proof-of-concept data on hair regrowth in actual humans. And then we get the full data set in early 2027. This isn't a trust us story, it's a watch us story, with very well-defined milestones.
All right, so we've established they have a potential blockbuster asset with a clear timeline. But a blueprint is completely useless if you run out of money before the building is finished. And that brings us to the most critical stress test of all, the durability test. We need to weigh the company's cash reserves against its burn rate to see if the financial structure can actually withstand the pressure long enough to reach those critical catalysts in 2026 and 2027. First, let's establish the force being applied to this structure, the cash burn. In just the fourth quarter of 2025, their research and development expenses alone came in at $25.3 million. That's the quarterly cost to keep this ambitious pipeline moving forward, to fund the clinical trials for ABS-201, and to keep that AI platform humming. It is a heavy, constant pressure on their balance sheet. Now, let's look at the strength of the foundation that's designed to resist that pressure. As of the end of the year, Absci had $144.3 million in cash, cash equivalents, and marketable securities on hand. This is their war chest. This is the raw material they have available to fund this entire construction project through its most critical phases. So you've got the cash on hand versus the burn rate. The math here is pretty clear.
And the conclusion is powerful. The company itself has stated that this cash position is sufficient to fund all of their operations well into the first half of 2028. What that means is they have the financial runway they need to get through their key catalysts. The foundation, at least for now, is strong enough to hold the weight.
So this really summarizes the entire conflict, doesn't it? The bear case is built on the hard, cold reality of the current financials, the massive revenue miss, the declining annual revenue, and that just shocking operating margin. While the bull case completely ignores that and focuses on the future, the game-changing AI platform, the really promising data for ABS-201, and a cash runway that gets them all the way to their key inflection points. An investment in this company is a choice between which one of those two narratives you believe is going to win out in the end. Our structural inspection is now complete. We've examined the surface-level damage from the earnings report, we've found the deeper cracks in the financial statements, but we have also analyzed the strength of the underlying blueprint and stress-tested the durability of its cash foundation. So now it is time for Iron Financial's final assessment. Is Absci an opportunity, or is it a trap? You know, I think this quote from a TD Cowen analyst on the earnings call just perfectly summarizes the bull thesis. They believe they have the three core components you need for success: clinical momentum, thanks to the ABS-201 data, the balance sheet with that runway into 2028, and the team to actually execute the plan. They believe all the necessary materials are on site and ready to build something absolutely massive. So the final verdict really comes down to this single question. Are you looking at a company that is in the process of forging a new high-strength alloy, combining artificial intelligence and biology to create something stronger than we've ever seen before? Or are you looking at a flawed structure that is already showing significant signs of stress and is destined to buckle under the immense pressure of its own cash burn and ambition? The financials are screaming caution, but the science is whispering revolution. For your own portfolio, you have to decide which one of those voices you're going to listen to. That's our analysis. Stay strong.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.